company that was doing extremely well at the start of the year did wind up its operations in 2023. I'm talking about Zestmoney. Zestmoney said, and the founders who resigned said, we do not have enough clarity on the regulatory framework. Is that the case with other fintech companies as well?
I mean, see,
Not really.
Zestmoney is definitely one of the early victims of RBI tightening its noose around making unsecured loans harder to get, right? There are more BNPL, buy now, pay later companies, but not too many which only do BNPL standalone. So you have a lot of fintech players, and these fintech players are fairly diverse in their offerings. If you ask me, honestly, even Paytm is a fintech player, but BNPL is only a part of its business. And even as we speak right now, Paytm is throttling back on its BNPL and sub 50,000 rupee personal loan category and wants to go after the more secure seeker of loans or a more secure borrower who will borrow, after all, KYC compliance, 2 lakh rupees and upwards, right? And the fact that Paytm is not really a BFSI company or not an NBFC. So it is actually borrowing money from an NBFC and giving it to a customer on its own platform. So if anything, it's an aggregator. But coming back to Zestmoney, Zestmoney really specialized in this BNPL category. And just a few months ago, Shweta, we are in the end of December right now. I think in the month of August, September, there were talks of PhonePe, which was founded by Flipkart, which is now owned by Walmart, wanting to buy Zestmoney and wanting to acquire a large enough stake in Zestmoney, when PhonePe wanted to actually go the Paytm way of distributing loans, unsecured small ticket size loans to customers. But as soon as we realized that the RBI is tightening the noose around unsecured loans, PhonePe withdrew from that particular negotiation and did not want to invest in Zestmoney anymore. And Zestmoney, obviously feeling the heat of the BNPL criticism all around, and then the regulations tightening around BNPL, realizing that it will have to let go of its employees. So in a statement that came out early December, the CEO of Zestmoney said that by end of the year, and we are at the fag end of the year right now, it would be winding up its operations and it would actually be shutting shop, and has told employees, I think there are 300 of them left, to find new jobs within the month of December. But around the mid of December, another little story emerged by another credit company called Credit PI, which in an open letter told Zestmoney's founders that they are willing for a handshake, and if required, they could merge the two entities and go ahead and give a new sort of identity under the Credit PI brand to Zestmoney, because Zestmoney has the infrastructure, has the employees, has some customers, and just the fact that regulations and a large sale to a large player in the fintech space did not go through should not be reason enough for it to wind down its operations. So Credit PI is the emerging story. I don't think we are just a few days away from the year closing, so it may not happen right now, but yeah, I mean, even if it takes another couple of months and it does allow Zestmoney to go ahead and get a new identity for itself and find employment for its employees, it's a good deal.
All I can tell you is that sounds like a light at the end of the tunnel. Let's just hope that it's not an oncoming train as far as Zestmoney is concerned.
And before we move from the fintech space, since you briefly touched on RBI tightening news around unpaid secured loans and unsecured credit access to people, is that likely to have an impact in 2024 on fintech players? Is that what you're foreseeing or reading at the moment?
I mean, see, it is definitely not going to be a lucrative category for banks, for NBFCs, as well as for fintech players, simply because the amount of capital they will have to keep aside for these unsecured loans is going to go up by about 25%. So that is one part of the story. The other part of the story, in any case, is the pressure on the books of banks and NBFCs being clean. And that is something that RBI wants at all costs, because we've seen the NPA mess that has been created, in the last many years in India, which is now beginning, hopefully, to clean up over time. Though we saw, I think, in a parliamentary question answer round, in the winter session of the parliament, that 10 lakh crore or so is still the amount of NPAs on the books of Indian banks. But that notwithstanding, it was a lucrative category for fintech players because they had the customers.
Right.
And they could negotiate on the basis of that large mass of customers with NBFCs to get a better rate of interest. So eventually it was fintech players borrowing money from NBFCs at a lower than market rate interest rate and pass it on to their customers and making that interest swap delta in between as income to themselves. But we are seeing Paytm going away from it. We are seeing the PhonePe acquisition of Zestmoney not happening. So PhonePe not wanting to get into that sector. So overall, this whole category of buy now, pay later is going to be a big question mark for 2024.
And especially with all those reports of the harassment of customers who've taken loans who are unable to pay back the installments of the loans, coming up on social media. So much concerns regarding, and some people even taking their lives based on the fact that they're ashamed of the fact that they're not able to catch these loans, and some of these companies which give these loans are intent on embarrassing them. So it becomes a huge social menace as well.
Absolutely.
These loan companies operating in an unregulated way.
It's going to be more difficult perhaps for customers, consumers come 2024 to perhaps get small ticket size loans, because that is what is going to take a beating.